stop for all real estate needs. Call 408-805-4653 or log on to nagarajhomes.com.
Hello, Bay Area. Welcome to the Real Estate Show with me, your Bay Area Realtor, entrepreneur, and a guide to everything real estate. Today, I'm joined by a very special guest, April Held, a seasoned mortgage consultant and expert with a mortgage. The next gen, she's helping us transforming a lot of buyers and homeowners navigating lending in today's very fast moving market. Hello, April. Welcome to the show.
Hi, Nagaraj.
So, listeners, if you have any questions on the Bay Area real estate, any questions on the mortgage, or anything on the related to concerns on investments or anything, or buying, selling, do give us a call. Our studio line numbers are 877 Bali 92, 877 Bali 92. How are the April, what are the mortgage rates heading this quarter? Like they already been, can't even believe it's a 7 months. It's a 7 months this year, and there were so many changes happen, especially on the April time frame. So many things are happening. Again, market is little bit shifting because of the trade things. Again, Trump is slowly bringing back.
Yeah, actually, interest rates have been doing good. Interest rates had continually gone lower up until about the end of June, and then we had a little upward movement in the rates. We had some bad job numbers today, so the interest rates actually came down and are looking really good today.
How are the rates for arms hour for 30-year fixed?
Yes.
These rates are like just thinking all the scenarios are correct, exact to get it. You should always give your call to the April and get our numbers properly. But this is based on the market right now. Yeah.
So 30-year fixed, all the 0-point rates, 30-year fixed is actually down to 6.375%.
Okay.
The 15-year fixed is down to 5.75, and the 5.5 ARM is also at 5.75. And I think that the ARMs might be coming down a little bit because we had this change. They always are a little bit delayed. When the market changes, 30-year fixed always changes a little quicker.
Little quicker. Arm rates are not bad. It's a 5.7. I think only problem is a lot of buyers or the homeowners, right, or like the future homeowners, they're always thinking in the mindset interest rates of 6%, 6.5%, which is not actually true. If you're looking for arm rates, right now it is 5.7, which is really good rates.
I would say probably 90% of my business, people are doing the ARM loans right now, especially in the Bay Area, because housing is expensive and also very savvy buyers, or savvy buyers and borrowers. So yeah, definitely the ARM is a good way to go.
But somebody else, for example, some homeowners have bought a house 2 months back or a 1 month back with a 10% down. Let's assume they bought it for a 1.6 million. They got a great deal, but the home has appreciated for a 1.75. Now they're doing an interest. They would because they are done with a 10% only. They're doing a PMI or an interest only, right? Can they combine the loan within two months?
You can, yeah. If the numbers make sense to where you don't, you different depending on how you structure it, but absolutely you can change a loan within a couple of months.
They can combine within a 2 months.
Pardon me?
Within a 2 months of the purchase, they can do a refinance it to
They
make
can.
the loan.
Yeah, they can. It's with some investors, it depends. It might be 6 months. They prefer 6 months. And there's different ways. When we have some of our loans that we do, some of our investors will do a modification versus a refinance at 6 months or 12 months. So there's just different caveats with different investors.
So, but in your case, if somebody had bought, they can always reach out to you. You can help them to refinance. If they can combine two loans into one loan now within a less than 2 months, but the appraisal needs to come.
Yes.
For appraisal needs to come in, for example, they bought it for a 1.6, home should appreciate for 160K more. Then only they can do it, right? Means actually the home value should be for 1.76.
Correct. And because that's also both loans are purchase money loans, it's considered a rate and term refinance.
What does it mean?
So instead, you're not actually taking cash out. So if you were, let's say you purchased a home and you got a home equity line later,
Mhm.
and you took some cash out of your home through an equity line. If you combine those, that's considered a cash out refi. That may have certain underwriting guidelines a little different. Whereas with two loans that you used for the purchase of your home, once you combine those, it's a rate and term refinance, which could have better, depending on the investor, could have better pricing.
Yeah, thank you so much for that. Listeners, myself, Realtor Nagaraj Annaiah, and I'm live with April. We are discussing a lot of mortgage related and real estate related in the Bay Area. If you have bought recently a house and would like to know more about the refinances, and if you're looking for you're a homeowner, and or like you're a future homeowner and would like to know more about the real estate, this is a show you should never miss out. Our studio line numbers are 877 Bali 92, 877 Bali 92. But how are the refinance rates looking around? Like if this we discussed with the scenario where like somebody had bought it recently 2 months back, but and they have bought it for a 10%. One that's one of the scenarios. Second scenario is like if somebody had bought it for 6 months back, how are the refinance rates are looking? Are your refinance rates are the same as the purchase rates?
Depends on the investor. So most of my investors, it's the same rate, whether it's purchase or refi, but there are different investors that, and I would say most investors, a large percentage of the investors that price them slightly higher rates for, and especially if you get cash out or are combining a non-purchase money second.
So in your case, that's good. Like, listen, the refinance and purchase rates, whatever we discussed in the early, the same apply for both. The currently the arm rates, it's a 5 year arms, right? Like are coming down to close to 5.7, and roughly 30-year fixed are coming to 6.35. Correct me if I'm wrong, April. That's the rates are the same, right?
That is correct.
So yeah, and for example, are we expecting a drop anytime soon, or like, or will they stay like whatever the current rates? Like I know the markets are fluctuating so much. Again, depends on Mr. Trump how he reacts every day. But are we? Do you think the rates going to 5% is going to happen pretty much this year, or should we wait for next year?
So this year we really don't expect it to go down that much. It'll go down probably some. I would say maybe expect 0.25% better in interest rate, but as of right now, the forecast through 2025 is to come down a little bit, but not hugely. So, but the way I look at it too is you never know what the future holds.
Yeah.
So if the refinance makes sense, if your purchase makes sense, don't wait and pinpoint the rate because it may be a really small difference. If it makes sense, do it. And then if it is a better rate later, you can always refinance again and get the better rate because you just never know. When people are trying to pinpoint the exact timing to get the best one, they usually miss it because it comes and goes so quickly.
I think that's a well said. I think it's basically when you are ready. If it's a drops from 5.7 to a 5.5%, let's say it's a 5% also. Let's take an hypothetically it goes to a 5%. What's your monthly payments? Maybe a $500 difference, but the house value can go up in 100K, where you're saving in more.
Mhm.
But when it drops to 5%, you can go and refinance it. It just do the math like that. You are ready, you need a house, you need for some reason, whatever the reason is, and you think you're financially fit for it, go for it. Don't keep like always checking on the markets. It's like it's finally, do you have a 12 months reserves? Do you have enough backout plans? That is where you need to go about it.
I agree with that because the property taxes also, if you wait and purchase a home more expensive, then you're also going to be paying higher property taxes. So if you're just looking at, let's say, interest rate, you're going to lose on the higher purchase price and potentially then also the property tax.
Yeah, it's finally home is kind of where you need to feel comfort. It's not where you need to compare. That's what I always keep saying. And investments also, it's all depends on how much flexible are you in. Are you okay to take highs and lows? Then you do the investments. Don't compare to somebody else and do the investments. Listeners, myself, Realtor Nagaraj Annaiah, and I'm talking to April L, and we're discussing a lot on the real estate. If you have anything to share, do give us a call. Our studio line numbers are 877 Bolly 92. How closely somebody else think there's a lot of bias was the Federal Reserve meetings. Do rate cuts really translate to a lower mortgage rates immediately? Like what? What's your experience on that?
Not immediately, but they do drive it. So the biggest factors in driving the mortgage rates are inflation, the Federal Reserve, which is basically monetary policy. It doesn't directly affect it, but it does show the expectations and things coming downstream. So it will affect it a little bit later, and then obviously treasury yields and such. But a lot of people think that when the Fed cuts the rates, that immediately, oh, rates went down today. The only thing that lowers are home equity lines, credit, some of your credit, credit card interest rates, things like that, that'll be directly.
Yeah. But at what rate, like, do the buyers finally start jumping back in? Like, is there anything a psychological threshold, like a 6% or a 5.5% or a 5%? Have you seen anything like a psychological threshold? For me, it's a 5.75 and 5.625 are the same for me. Okay, because it's just a $50 difference.
I agree. People get very stuck on a number, which really what they have to see is what is that payment? What is this? Is it that big of a difference? They might, for an eighth of a percent of interest rate, say, "Hey, I'm going to go with this other lender that is some lender that they don't really know what they're doing. They don't really, they may not give good service. They might not answer questions, and it doesn't make as much of a difference
Yeah,
if you're
it's
in
part
that
of
in that range. I don't think.
we were discussing about that before the meeting also here. Like, it's actually comes down to, is the lender has run through all the scenarios? Are the lender is confident to close your file? It is not about just always. For me, a lot of people thinks about, I got 0.125 difference. You just saving a $50. That is like when you're buying a bigger house, you're like spending somewhere else that $50, right? Like it's in a, if you count it for even for an year, it's a $600,
That is correct.
right? So uh, it all comes down to, it's just always don't think about 0.125 and other stuff. It's finally thinks about like what, because at some point of the time right now the rates are, so many people are coming in, so many homes, like it's at rates what we are buying, and we need to buy a refinance, because going to 3% to a pandemic or a 2% to a pandemic looks like it's too far right now. I think might be that was like, it looks like it was in a different era altogether. It might have happened 4 years back, 5 years back, but still it's in a different era. I don't think so we are going to reach the 2% anymore.
Mm-hmm.
Right. So, listeners, if you have any questions, myself, Realtor Nagaraj Annaiah, and I'm talking to April L, and we're discussing a lot of on the mortgage. And if you like to share something, you're more than welcome. Our studio line numbers are 877 Bolly 92, 877 Bolly 92. And April, like we were discussing about what type of buyers are having the hardest time to qualify today. Like what options like are available to them. Like uh, is the rates, or like for example, is it the credit scores, or what is the things you think hardest time thing to qualify for?
I would say the hardest to qualify would definitely be people that are self-employed,
Mhm.
because what we obviously use to mitigate our tax risk also is the income that we have to qualify for. So that is always the most difficult, or self-employed. Um, there are credit issues. I think a lot of the folks that are probably listening to this might not be, I would say most of the Bay Area people that I speak with have very good credit. So that's not always something. Sometimes the down payment can be a little bit of a challenge because the housing prices are so expensive. But fortunately, we have some 10% down options for jumbos, so that's really helpful.
No, but I would like to talk about, like, see a lot of buyers when they start looking in, or like the future homeowners, right? they say go about it with saying setting the monthly budget. They keep always saying, Nagaraj, I need to don't want to cross more than 6,000. I don't want to cross more than 7,000. Okay, uh, is that the right way to go about it? Because should they go on by based on 6,000 or 7,000 one smaller house, or they need to be flexible on their monthly payments and find a better home for them? What is your advice on that?
I think a lot of times they have to be a little flexible because they have to, depending on what their plans are for their family. Because if it's, if they're going to expand their family quicker and they're going to buy, going to move from that house to the next house quickly. So it really depends on a lot of dynamics. So I think coming in with a little bit of flexibility to at least look at the different options and then just finding the one that suits you the best.
But how accurate also when they're doing a math? Because a lot of times when you go with all the estimates, like it can be Redfin or it can be some other estimates, right? All the
Yes.
numbers what it gives, like they might be estimating it for a 6.2%, which is not actually the true, right? And even
Mm.
the insurances, whatever the values it gives in.
I find also that a lot of people may not also know exactly what their income is exactly. They may underestimate some of their income. A lot of times I find on applications when people are filling in their income on, they're actually underestimating what their actual income is when I go to calculate it.
So where do you think the most underestimating will go based on the incomes? Like, is it based on the RSUs they will count wrong, or the bonuses will they count wrong, or sometimes they will include more on the bonuses, because that itself is a different ball game actually, right? Bonuses needs to be from the last 2 years needs to be calculated. Only if it's calculated from the last 2 years, then only bonuses can be considered. And RSUs also, you should be staying in that company from the last 2 years, then only it will be considered.
Yeah, I would say actually on all of those, I've seen under reporting of their income on all of those factors.
But what is the most trickiest part you have seen on the RSUs? Like a lot of home buyers needs to be careful. Future home buyers needs to be careful on the RSUs part.
The hardest one is just you basically have to look back 2 years
Uh-huh.
of what all the awards were and how many shares were in each award for the year. And then, because we also have to do a calculation of an average of what that stock price is. So, just getting that data and that information. So a lot of times it would be difficult for them to be able to calculate that. But that's probably the trickiest part of it is just going back. We have to go back 2 years.
And they need to be to consider that RSUs also they should be in that same employer with the same employer from the last 2 years.
That is correct. Yeah, because it has to be, we're looking at future. So we're taking an average of the past and applying that to the future. So if, yeah, it wasn't something that's going to continue in the future and it's a past employer, we can't use it. And we can use even a little bit, like we go back 2 years, but we can go back just a year as well. We do have flexibility. So sometimes certain lenders
Because
will
I remember
not.
you help a lot of my clients with a 1 year history
Yes.
also. That's because that is why, like, it depends on the scenarios. Actually, it's nothing wrong. Talk to the lender, get an opinion on it when they're into it. And one more thing, a lot of circumstances I've seen is if they moved from India from 1 year back, let's say,
Mhm.
will they be able to purchase a home area? Like, or even the 6 months back, they were working in India in a good MNC company. Will they be able to buy a house?
Mhm. Yeah, we have to figure out a way to verify the job, the past job history. But I would say so most folks moving over then would have a salary. We'd have to go because we don't necessarily, unless there was a transfer or something like that. But if it's a new employer, we would just have to use the base salary. We couldn't use the bonuses, RSUs, or anything like that because there's no 2 year history. But no, absolutely. If there's a salary, we go straight off of what the salary is for qualification.
So basically, if somebody has moved from India 6 months back, or moved from anything from abroad, moved from a lot of immigrants, US is always about immigrants. Somebody has moved just right now.
Yeah,
Even if it's just they moved right now, they should be able to qualify to buy a house here. And
absolutely. Yeah, I've helped quite a few people that have either been from other countries or moved back from being abroad. And yeah, we can absolutely do the loan. We just have to document the 2 years history of their employment, but we can use their base
If
salary.
they started a new job, they can't qualify for it, right? Like means if they basically if in a student, let's say he's in a student and he has started his job, will he be able to purchase a home here?
Yes, because when you're going to university, that is actually considered job training. So we get a copy of the degree.
Wow. See, a lot of people might be like just graduating and they're thinking in like, I'll keep renting it out. This is the future you need to be thinking about. Future, build the wealth, right? And what are the like, for example, somebody has moved right now and they don't have any down payment. Can the down payment be a full gift?
Absolutely.
So they can move the funds from India also and they can buy it.
Yes, absolutely. Yeah, we just have to do a gift letter, which is nothing that gets reported to the IRS. That's the first question I always am asked.
Yeah.
It's something for the loan file. And then, yeah, they can absolutely give a gift for the full down payment amount.
Okay. And one more scenario is a lot of times I run out is parents, right? Because a lot
Mhm.
of parents have got a green card, like their dependents, and like they move to US right now, right? So if in their case, if they because most of them might be not working here, but they have a capital in India, right?
Mm.
Or they have a capital in abroad, right? Like can they use that funds here and they can purchase the how, like if they don't have income, I think of course you can't help on the mortgage, right? Like you can't
Mhm.
help them out on the mortgage. But if they have some jobs, they're doing some jobs, they should be able, even more than 55 years old, 60 years old, they should be able to buy the home here, right?
Yeah, exactly. And depending on assets and such as well, there are certain ways to qualify with assets as well. It would have to be, a sizable amount of assets, but we can use assets as well if somebody's using that for their monthly payment.
Or based on the rents in India and everything, or rents in abroad, they can qualify. That's because that's one of the income they're getting it.
Correct.
See, listeners, see so many options for each and everybody. Only thing is you need to dream big. That is what is all about our show. If you have like, I think we are running out of a time, but there's one more last question, right? Like, what is the lowest FICO score you can, or lowest credit score you can help out on the when somebody who is purchasing a house?
Well, it will have a maximum loan amount, but we can do in the low 500s. It will have a maximum loan amount that you'd have to pick a certain area, but yeah, in the 500s we do have options.
But if they move from abroad, the credit scores are not good. How do you qualify them in their case scenarios?
So depending on it is if they're coming over with challenge credit, we do have different loan options for that. So
Okay, basically from you're not going to consider credit scores from if they just moved in from two
if
months.
they just moved, then we're gonna build their credit quickly.
Okay, good. Thank you so much, April, for your for joining in today. If somebody wants to talk to you and would like to know more about your rates and other stuff, or the best number to contact you.
It is at 949-306-8100.
Listeners, if you want to talk to me and would like to know more about my off market and coming soon listings, and you would like to list your house, and I have a couple of listings coming in Foster City, one coming up in San Jose, and one in Fremont, would like to know more about these informations, you do give me a call. It's easy to reach out. Go to nagarajhomes.com, click on a WhatsApp icon, easy to reach out to me. Thank you so much for all the listeners. Have a wonderful evening. Thank you.
Mhm.